Look at those peasants. I don't know if those are peasants, but they're birds. They're migrating. I wonder which direction they're going though. They're supposed to go south, right? Yeah, south. What's going on, guys, and welcome back to Penthouse Finance. I will be your host like I am in every single episode, and my name is Aaron. On Penthouse Finance, not every day is a sunny day, as you guys can see. Today is a very rainy day, so the lighting's gonna be a little bit off, but it's gonna be an awesome episode, guys, because we're talking about picking a place to live, where should I invest, and buying your first property. Whether you're buying your first property, whether you're looking to become a real estate investor, picking your location is so very important. So guys, we're gonna get into real estate investing today, and we're gonna be talking about the pros and cons of specifically maybe the city that you're living in versus surrounding cities or other markets if you're looking to invest in real estate. Because at the end of the day, just because you live in one specific city might not be the best place to invest in real estate, and you have tons of other options, you have tons of other cities to invest in, but at the same time, I can understand, being close to your first property, there's that emotional attachment, although we shouldn't get too emotionally attached to our first property or any investment to begin with, but that's a whole nother video. So we talked about it in our other videos many times. I'm a big believer in investing in real estate. I invest in real estate, and it's a great way to generate net worth and create a substantial net worth. But at the end of the day, picking that specific city or where you want to invest in is very, very important, and it's crucial for your success as a real estate investor. If you were a real estate investor and you weren't looking at the future and you're investing in Detroit, for example, let's use Detroit as an example. Back in 2008, real estate prices were booming. What happened to real estate prices in Detroit? They crashed and they still never fully recovered. So guys, if you want to avoid that, if you want to recession-proof your real estate portfolio, let's talk about things to watch and things that are most important when it comes to investing in real estate. So, number one. So the first thing we're talking about is infrastructure, public transportation, things like subway lines, things like light rail transit. If your city is investing a massive amount of capital into the public infrastructure, into the public transportation system, they must be anticipating a big influx of people coming to the city, which should translate into further demand, which should bring prices up, and also more jobs, more higher paying jobs, and that will support higher valuations when it comes to real estate prices. So that's of course what we're looking for. When it comes to investing in real estate, you can build equity by having a renter in the house. Also, a lot of the money in real estate is made on appreciation. That's when the market simply gets more expensive. Alright guys, so the second thing to watch when investing in real estate is how much money is the federal government spending on that specific city when it comes to tech programs. Take a look around your city. What kind of companies are actually in the city? Are you seeing lots of tech companies move in? Are some of the big companies, headquartering themselves there? Google, Facebook, Amazon, all these big tech companies, Microsoft, IBM. Taking a look at the local economy is one of the most important things when it comes down to investing in real estate, because you want to make sure that, in the event of an economic downturn, your city's economy is not just dependent on one sector, like let's say manufacturing. That's why cities like Detroit, which heavily relied on the automotive industry, completely went downhill in the recession, as a lot of those car manufacturers needed to be bailed out. Thousands of people lost their jobs. Thousands of people moved out of the city. The city lost population, which translated into crashing real estate prices. So what are the hot sectors? Well, tech, like I said, we got Google, Facebook, Amazon, all the FANG stocks, Netflix even. There's so many companies out there. If they're moving into your city, that's a pretty good sign. If there's lots of people working in the tech industry in your city, that's probably a pretty good sign that the local economy is going to be able to support the real estate prices, and you should see those nice percentage increases year over year. We're going to take a two-part approach to this whole local economy thing and go a little bit deeper, talk about diversification. So what are other good signs when it comes to having a diversified local economy? If you've got companies like banks, insurance companies, that's a good sign that your local economy is very diversified and should support real estate prices. So look out for those signs, take a look, take a drive around the city, check out, see, I've got some tech companies. What is the local economy, and do you feel confident in those specific sectors moving forward, because we are getting late into the economic cycle. There could potentially be an economic slowdown on the horizon. And just think, in the next recession, what sectors are going to get hit the hardest, and what sectors should chug on and be able to support current real estate prices. All right guys, so the next piece of advice, or number 3, is go to your city, go to the planning department and ask them for the development plans for the next 5 to 10 years. A lot of this information is public record, and you should be able to find out what kind of new developments are going in, what companies are going in, are they building office towers, do they have lots of plans to develop the downtown core, are they spending tons of money on infrastructure. If those are all green lights, then chances are real estate prices are going to go up, and you can base your real estate decisions on those plans. So if you know that one area of the city is being rejuvenated, they're going to pump a bunch of money into it and make it look all nice, well, buying a property in that area or close to that area, chances are it might go up in value. All right guys, that brings us to the 4th thing to watch when it comes to buying real estate in a specific city, and that is universities, college, and education. As we know, this is a massive business. This draws tons of people to a specific city. Think about Harvard, think about MIT, all those really important Ivy League schools. They draw a massive crowd. The students graduate, they buy properties there, they bring their families there, and the whole economy is just flourishing. Real estate prices just keep going up in cities that are supported by great universities. So take a look at your city. What kind of universities are in your city? Make sure it's like a top 10 to 20 universities. I would put more emphasis on an accredited university, or the top 10 to 20 universities, as I said, within the country. Take a look at that, and depending on the type of real estate you're looking to buy, there are options in the student rental market. They tend to generate lots and lots of cash flow, although appreciation and liquidity can be limited when it comes to those specific investments. All right guys, that brings us to the next thing to watch, and that is the overall real estate market and the overall real estate economy in your city. So how has it been growing? Make sure to check the statistics. What are the rental rates? What are the vacancy rates? What is the list to sale price ratio? If your list to sale price ratio is 99%, 100%, that means that homes are selling really close to what they sell them for, or even sometimes more. Also check how many days on market. That means how many days is it going to take a house to sell after it's listed. The lower the days on market, that means the faster homes are selling, and generally means that there's a lot of demand for properties that are being sold within your city. 2 things I would be very cautious with when it comes to real estate and real estate prices are markets that have flatlined for a very long time. Usually when a market flatlines, it means something's going on with the local economy. It might not be growing. People might be leaving, and we're not too sure what's happening. So be careful with real estate markets that have flatlined for a while, unless you know there's big investment going into the city. The second most important thing to watch out and be careful for in certain markets are real estate prices that have climbed by double digits year over year over year. That tends to indicate that we could be getting into bubble territory, there might be a correction coming, and you could see cheaper prices just on the horizon, not to mention the global economy slowing a little bit, and as I said, we could see cheaper prices. When it comes to growth, what I really like to see is a slow and steady 3 to 5% growth per year. Obviously we can't control the market, but I feel a lot more comfortable investing in a real estate market that has steadily gained 3%, 4%, 5%, as opposed to gaining 10, 15, 17, 20%, and sitting way up here, and then has the potential to crash. Nobody likes bubbles. I like investing in stable economies. All right guys, that brings us to the last thing that we're talking about today, and this is a very interesting phenomenon when it comes to real estate, specific cities, and that is the coffee price and the amount of cafes. Those cities with high coffee prices, very unique, select coffee from all these different little pop-up shops, that tends to indicate that it has a thriving tech culture, and tech brings high-paying jobs, which translates into many people buying real estate, which translates into investor returns if you're a real estate investor. So make sure to take a look at your local economy, make sure to take a look at your city, visit some of those little coffee shops, see how much it costs for coffee. And if those prices just keep going up, then that's probably a good sign. You might be paying more every day for a cup of coffee, but those real estate investments that you have are probably going up very nicely in value. Alright guys, that brings us to the end of this video, where every day is a beautiful day at Penthouse Finance, even though it's pouring rain outside today. If you like these videos about real estate investing, make sure to drop us some comments. Let us know, what are your favorite kinds of videos? Do you want to learn about the stock market? Do you want to learn about budgeting? Do you want to learn about how to make passive income? There's so many things to talk about when it comes to finance, and I love to give my take on certain things and offer the best advice I possibly can in an entertaining manner, so that hopefully you guys can learn something and we can all grow together. But anyways guys, that's it for the video. Don't forget to hit that like button and smash that subscribe button with the bell for notifications. We're out of here guys.